All right. Good morning, good afternoon, good evening. We are looking at Tuesday, the 20th of February. Let's see what we can get ourselves into today. So, nothing for us on the calendar to be concerned with. Yesterday's trades managed to close in profit after a long extended wait. Today's trading starts at the extreme. We seem to be at the top of the daily candle. Daily candle itself is 70 or so pips. Right now it's 78 pips. The average should be 60 or in that neighborhood. So we've exceeded the average. If we put a Fibonacci on just the US CPI event from the other day, we've made it to 127% of that extension. There's room to roam still, right? And if we look at today compared to the week prior, we've broken out. And so this is the test that we've been worried about, all of these last few days. And so we've broken out of the trend line and we've broken from the high. I suspect this is temporary. This is a trap, right? And the reason why I'm adamant about this is when I look at the dollar index, it itself is at support and we're just testing support. There might be room to probe a little deeper and still find support and keep going. Yields themselves are at support and bullish, right? So I don't want to fight the US bullishness, and therefore I need to remain bearish to euro. And so that may require, taking a little heat like today, right? So this move right here was already 36 pips and they gave us a little bit more, just to make sure you feel the heat, right? So when we look at this daily and we see we overextended, we zoom in on an hourly, and then here you can figure out, okay, well, where's the ceiling and where's the floor? Well, clearly the ceiling is, at the top, the floor is at the bottom, but there's intermediate levels. And one that we need to be concerned with is '08. It'd be nice if we can retest this break area here, right? So with that in mind, as the market was pushing up, I was selling it, right? Because I'm thinking this is not on the way to the moon without retesting where we came from. And so with this approach, now I had to zoom in on the 5-minute chart and start to highlight this particular area, but really with a ladder, right? So we're highlighting the ceiling. We want to be highlighting the floor, intermediate and otherwise, right? And we're expecting to be traveling through this ladder like we would every day. And then this becomes points where we need to ask ourselves a couple of questions. Like, do I want to stay or do I want to go? Right? So if I'm already in a trade, you may want to add to your trades or you may want to remove from your trades when we get to these levels. Right? So this is just eyeballs. This is just your mind's eye looking left, realizing what was important before might be important again. Right? And there's many, many ways of doing this. I like to just do it as simply as possible, right? The simplest method. And this has worked for me over and over and over, so I'm not going to reinvent the wheel. Right? So as I'm approaching one of these levels, I choose whether I want to add to an existing trade or choose maybe to get out of a bad trade at these levels, right? These levels will correspond to the box. And so the box itself never changes. It's my measuring cup. I just choose what I measure with it. And in this case, I choose to measure from this swing. And I can see the market gave me one box already. And so now we're moving sideways through this box, right? Because it's overextended on the day, I doubt right? It's a probability. I doubt that there's further upside and rather more downside for my 2 hours, right? I may be wrong overall. We may keep going tomorrow. But for my 2 hours right now, it's based on time of day and where we are currently, right? And because of what I've built here as a swing trade, as a swing position, I'm hedging it just in case, right? So within this swing position, I'm going to be trading 2 pips, 2 pips, or sorry, 3 pips, 3 pips, 3 pips, and I'll be doing it through the boxes, and I'll be selling at resistance. So something like here right now, right? I'll take a trade, I'll take two, and now I'm left with two more to spend in this box, right? Right, so disregard the swing positions, imagine they're not there, and just focus on selling green candles at resistance, right? Something like this. If we get up in this area here, this would be even better, right? You want to sell this. Let's see, chat. This is probably a little bit better. All right, so here we are. We're going to recycle ourselves some trades, and then we'll be able to repeat. Okay, so because of what's happening with the dollar index, I suspect I'm going to be shorting into the end of the week. Right? I suspect around here, or even the next extension, 865. So ultimately, 865 is where I want to end selling. Right? This is where I have to stop this bias. Right? There we are. So we're making a little bit of money, and I'm carrying forward my swing trades. Right, so if we break out of that box, this will set me up for a new box right here. Oops, sorry. International spam calls. Right here. And so I'm a seller of resistance. And so if we go up, I sell. If we break, I will sell the retest of the break. Still waiting for a green. Oh, there we go. I'll take two trades there. All right, so I just opened two to recycle the two that closed. Let's see if we can close some more and recycle some more. Perfect. Right? We want to stay in this bottom box, and a little pullback, a little retest of that breakdown, right? So it would be a selling opportunity there. Right? We're taking this morning's move correlates to the dollar weakness, right? And it's preemptive, I believe, to the FOMC minutes and all this kind of stuff. All right, this is all looking forward to U.S. news. Right. Green candle, I missed it. Oh, right there. Okay. If you're trading gold, you probably don't want to be selling gold, right? Watch it go down and then just accumulate when it's cheap, right? Play the upsides of gold. Don't play the downsides of gold. Right? Be picky with gold because it will rip your head off if you're wrong. Also, you can, accumulate physical gold, buy your spouse jewelry, your kids, sit on gold. It's not something you sell, it's something you buy. Right, so right here we want to sell. Right, and I'm going to take a second one on the top of that candle there. Right, so you'll notice where my break even is. That's the overall break even from everything that I'm working with. Right, so that's the swing trades that I have, including my 3 pips trades, and it's 9 pips away. Right, so ultimately we're thinking this is going to end lower, right? But maybe not today. Right, we were anticipating this move up yesterday. Right, we've been on the lookout for this push all week, and it happened. What time did this happen at? About an hour and a half after the open this morning. About an hour after the open in the European session. Right, so this was expected. It was anticipated. I'm hoping some of you guys, profited from that or used it to build a short position, in which case you probably took a little bit of heat, maybe twice, right? Nonetheless, the dollar index is driving the bus. We don't want to fight the dollar index. In our case, we don't want to fight this. Let me show you. All right, we don't want to fight. Right. Treasuries are bullish. Bonds are bouncing off the lows. The yields are at support. That should offer us weakness on the euro. And this should offer us weakness on the euro. Right? Finally. Right? As we've been experiencing dollar weakness, the euro's been going up. We're now at support. The dollar index should start to go up. The euro should start to go down. Right? So this is consequential. Right? When we're looking at gold, while we're at it, let's see where my gold chart is. When we're looking at the gold market, come on, I'm stuck. Where's my mouse? Right here. When we're looking at gold, it's in a similar type of situation, right? We rallied up to resistance, and we don't want to sell resistance. You just want to watch it go down and buy more, right? Every bank on the planet is accumulating gold. Why shouldn't we? So here you are making a little bit of money, recycling some of our trades. Perfect. Perfect, perfect. If it pushes green, I'll sell more. Right? I'll recycle the same 3 or 4 clicks that just closed here. A retest of '08 would be awesome. And then from '08, I can envision, I can just see it happening. You know, I wouldn't put it past the market to do something like this, revisit '08, and then from '08, go back up and revisit 65, and then from 65, we'll rip faces off. All right, so let's be on the lookout for something like this. And therefore, watch out what happens 3 boxes down from here. Right? We want to be able to recycle our trades. So this is what I have on the board right now. Right? And I am 5-6 pips away from breaking even, and then I'm in the money for the rest of the way. There we are. If it pushes up like it did just a second ago, I'll take a sell there. And this is why I posted earlier in the chat room to not be chasing this, right? Because as we speak, a lot of people are assuming the high was in, you know, maybe for the week, maybe for the day, maybe for the hour. It's a back and forth event, right? It's going in both directions. And so be picky and don't try to play both sides. You know, choose one side, exploit it, and then wait for it to come back, right? So you may be doing nothing while it goes the wrong way. You know, waiting to sell. Right. For those of you that are using MT4 for your trading, overnight yesterday it updated to 1408. I don't know what that is. I don't know what the updates are. They don't tell us. But it's important to know that they pushed an update. It came across all of my MT4 platforms, and so it must come from MetaQuotes. Right, so here's green, green. I want to sell this. Right, and I'm selling what I see as resistance on my left, right here. Right here on the left. I'll take 2. So I opened 2 trades at that level. So I'm measuring a Fibonacci on last week's main event. We happened to go all the way to 127 plus 6 pips or so. I have a target at 865 if we get there. Right. So the plan is something like this. And the execution might be very different. We have to trade the facts as what they are presented. So we can't create something that's not there. We just have to trade it as we see it. Right, so I sold the top of the box, these green candles here, and within a minute or so I should be able to make some money. The bars are substantially bigger today than they were yesterday during the holiday. Right? And usually Tuesday would be considered turnaround Tuesday. That's the old wives' tale we tend to label. And considering yesterday was a holiday, turnaround Tuesday may actually not happen. Right? So we have to be careful how shallow this goes, or should I say how deep this goes. Right? Do we even make it down here? All right, so we pick a side. In my case, I'm a seller for today. And hopefully if I'm right with my side, I'm eliminating most of the issues, right? If I'm wrong on the side, I'll know immediately. I'll be in drawdown. I'll be sweating at the brow. And so ideally, you're in the money a lot faster than you think. And it's that behavior, right? You're trying to recycle the wins and manage the losses, or deal with the losses maybe as a whole. That's what I tend to do. I accumulate a bunch of drawdown and I deal with it with one break even. In the meantime, I'm busy booking 3 pips, 3 pips, 3 pips. Right? So the high probability trades close by themselves while I am engineering an exit for those trades that are not working out. When we look at the higher perspective, starting from the weekly, just last week we had this red doji. If we look at it on a daily, last Friday we had this pin bar right there. And so yesterday and today obviously have gone opposite, right? We've gone towards the low probability, right? We've gone in the low end, in the low probability, and we're not going to the moon. That's something we have to keep reminding ourselves, right? This is not going to the moon. This is going to resistance. It's looking for resistance. It looks like it may have found some right around here. Right? We're just envisioning what it can do. The longer we have this outlook, a weekly outlook, the more improbable things are. The tighter we start looking in, 1 hour, all of a sudden our luck starts to increase, right? We have a much better success rate envisioning 1 hour into the future than 1 week into the future. And likewise, on your 5-minute chart, you have a lot higher success rate envisioning the next 5-minute candle compared to the next 1 week candle. All right, so we, in our world, we're envisioning 1 box at a time. So here's that green candle pushing up into that resistance. Oh, into box number one. I'm recycling a trade there. Usually the FOMC minutes, which we are expecting later this week, they're a reflection of what we already know, right? The actual meeting. The minutes do sometimes contain differences, changes in the words, and so that's what we're going to be looking for. Right? Just the way they took the notes, and basically it's the demeanor, and we'll see what happens. It's not atypical to see the euro go up before that type of event. That's why I'm suggesting 865 might still be in the cards. Let's put a marker up there. I'll paint that one red. And that would be another 36 pip leg. Yep. So we have to be, this is an average move, average move, average move. All right, bottom of the hour. That would usually be the end of the pullback, right? So if this was the pullback, this would be the end of the pullback, bottom of the hour, and we would expect a continuation move, right? The day is already overextended, and so we have to expect limited extensions, right? How much further can this go? Right? Can it do another 3 boxes? The market's done 100 pips before. Right? The probabilities are low, but it's still a real probability. It's still something that could happen. Right? So be on the lookout. If we start making higher highs, if we start changing structure, you want to start booking losses. Right? My swing trade is hedged right there, and so if I'm forced to, I'll be hedging the swings, and I'll be booking losses on my 3 pips, 3 pips, 3 pips, which I only have 3 trades. So I can probably open a few more. I'll open a 4th right there. Right, so we know we want to be selling up to 865. Ultimately, the end game is for a much lower outcome on all of this. Right? Don't forget, it's all about the dollar index. Right? The flip side to the Euro USD. The dollar index itself is made up of approximately 58% euros, and so it makes sense that we look at it as a counterparty. Like, even if, depending on where you live, if you're trading the antipodium pairs, the Aussie and New Zealand, you're still trading those against the US dollar, more than likely. And so you still have to keep an eye on the dollar index. And even if you're trading something like Aussie yen or New Zealand yen, you're still being impacted by what the dollar is doing. So be, be cautious of the dollar on all fronts. And that's kind of what I do by looking at the dollar index and the 10-year yield. It's like a hand and a glove. They go together. Right, so here's us closing a few more winners. Right, the average of all my work is still within reach, well within reach. I'm only, a few pips away. And the news forthcoming this week should be the driver for the move back down near Thursday, Friday. All right, so going up at the beginning of the week is kind of what I would have expected looking at last week's weekly candle. Only to finish this week bearish. That's my goal anyways. We'll see if it comes to fruition. Right, so it's this willingness to take the heat. When everybody is trying to chase this, buying it because it looks like it's going to the moon, they're buying it from someone who is willing to sell it to them, and that so happens to be us. Right? Because we are looking left and we can see resistance from the past. Something in the past is stopping the price from going to the moon. Right? And that makes us money. Right? So I'm back into this lower box here. If I retrace up to the edge, I'll take a trade. I'll sell this. Right, so those of you that were watching the video yesterday, we talked about switching to futures for those of you that live in the US, only because trading CFDs in your case is almost illegal at this point. So you have to be very, very cautious, broker risk, so on and so forth. In order to remain legitimate, you'll be trading futures in no time flat, right? So start learning, the differences. It's mostly all about the margin requirements and stuff like that. You're still going to be trading the exact same way, the same psychology. You're learning to lose. Doesn't matter if you're trading bonds or futures or forex or stocks. Right, here's green. I'm selling on the green. And I just replaced those same two trades that closed. Right, so when we're trading futures, it's the same kind of idea, except you'll be faced with first in, first out. Right, so this thing about being early on the move will become a little bit more complicated, right? Not impossible, but more complicated. You're basically trying to be more of a sniper. This method here, selling resistance, buying support, works beautifully. Right, there's another standard deviation right here. Will we bounce? Let us see what happens. All right, so we've been at this for 34 minutes, and we've closed maybe 15 trades or so. Okay, some of these are doubles and triples. Let's continue this for another 20 minutes. And we'll call it a day. And so going back to the futures thing, because of the volume of traders that are from the US, I may actually myself go back to the futures trading and maybe start doing it every other day, just so we can do it together. Right? So one day I'd be doing this here in front of the Forex traders, and the next day I'd be doing the similar on futures for the futures traders. And then we could switch back and forth, back and forth, back and forth. Same time of day, there's no need to change that perspective. I may be able to do some stuff a little bit earlier on the futures market, actually. So, yeah, it'd be for the U.S. citizens, it's almost a prerequisite. You can't be moving towards trading CFDs. Right? So, learning how to trade in a demo account, that's not the issue. It's when you start making real money and bringing that money home. You have to be doing it legitimately within U.S. boundaries. You know, the IRS gets involved, right? So you don't want to be going against your government when it comes to your money. Right? Play by the rules. So yeah, it's just getting tougher. All right, so we're closing more trades. I'm just waiting to see green so I can recycle that. And those of you that are interested, you know, the links to the futures platform that I use is at the bottom of the videos on all the YouTube recordings. The company is called Trade Day. Now, if you use the code word or the coupon code Jasper, you'll save, I think it's 20%. There we are, just about ready to break even. Right. If I can see green here, I'll recycle that. One of the reasons why I slowly moved away originally from trading futures towards trading Forex is because I can fine tune the risk with Forex. Right? You have better control over your sizing and therefore your risk. And a lot of it boils down to the leverage we have access to when I'm trading Forex. And so I exploit the leverage in a good way. Trading futures is an expensive game. All right, so here's one more standard deviation. I'm waiting to see if I can see a green candle to sell here. And we're breaking even officially. We're in the money as we speak. Where am I? Yeah, I'm in the money. For those of you looking at checking out that Trade Day platform or outfit, they do have a 14-day free trial. You can try them out. You know, come on, green candle, and I'm selling right there. 1, 2. Right, I really want to revisit that yellow line here. A couple of more rungs on our ladder. And then buy some of this for a trip back up to here, which would be about 65 pips away, I believe. Oh, 60 pips away. And that would be an average day. All right, so that might be tomorrow's line of work. We'll see. The monthly fee for trading futures is a monthly fee. It's every month. When you're trading futures, you have to pay for the data, right? You have to pay for the incoming data. Unlike Forex, you also typically would have to pay for the platform that you're using, right? And the quotes come directly from the exchange, right? From the CME. And so the fees are legitimate and the fees are real, like they add up, right? So this is a man's game at that point, right? Practice in the simulator, practice in the take that 14-day free trial before you sign up for stuff. Right? The potential return is the same, if not more. Right? You have to have a skill. Yeah. Those of you asking in the chat for the U.S. brokers like Owanda, they're still okay. The legitimate brokers you have access to right now, they're still there, right? Because they themselves don't let you trade CFDs, right? It's the outside brokers that were allowing U.S. clients to sign up and trade CFDs. Those are all getting shut down, right? They're all losing their access to MT4. Right? So if a broker out there has a US client on their roster, well, that broker is losing their access to MT4. MT4 was specifically designed to allow CFD trading, right? To allow currency trading. And so it opened the door to circumventing the US rules. Yeah, they probably have their own license. They probably own their server. Yeah. Yeah, there's a few of them out there. There's still a few, U.S. friendly brokers, which we won't mention here. But be careful with those, because the issue is not making the deposits or trading. The issue is bringing the money back home, right? Once you start earning profits and you withdraw profits from those offshore brokers, you have to declare those profits on your taxes, and the IRS will ask, where did that money come from? And you'll be forced to say, well, I'm trading at so and so, and they'll go and knock on so and so's door and say, where's that person's taxes? Where's their tax slip? And they don't do business with US, right? So there's a problem. It's always been a problem. You're best to stay legitimate. Myself, I live in Canada, so I don't have the same rules. I'm not exposed to the same issues. All right, so if I measure from here, we have broken into this lower box. If we measure from the top, we have gone 3 boxes already, all right, just about. We're 3 pips away. Just waiting to see a little bit more of this. I move down to the bottom of the box right there. Would recycle my open trades right here. and will allow me to close a whole bunch of swings at the same time. I'm going to take this, take this, take this. 14 pip trades, 12 pips, 8 pips. There we go. And so I'm only left with open trades, about $40 worth of drawdown. And because I'll be here trading, for the next few hours along with other students, I'll be managing what's left on my book, and I'll be doing it accordingly, or according to what I have access to, and so on and so forth. Okay, so you get the point, right? We sell resistance all the way up to 865, right? But you're going to be experiencing a little bit of heat in your kitchen, right? So be willing to be wrong for a few minutes at a time. Postpone that gratification. All right, and I'll see you guys tomorrow, same time, same place, all right, same everything. Talk to you then. Trade safe. Bye-bye.